Welcome back to The Explainer. So when most people think about investing, they instantly picture, blinking green and red numbers on a screen or massive spreadsheets or these incredibly complicated financial models. But today, we're diving into some source material that completely flips that idea on its head. It proves that true wealth creation is actually a psychological battle. It's not just a numbers game. It's really about who you are, not just what you know. So let's jump right in and uncover why character is actually the ultimate deciding factor in investing.
There's this quote from the text that I want you to just let sink in for a second. Investing is a deeply lonely journey. It's heavy, right? And it goes against basically everything we're taught in our hyper-connected world. I mean, we are biologically wired to be part of a pack, to find safety in numbers. But the brutal, completely unfiltered reality of the markets is that seeking out company is often the absolute fastest way to lose your shirt.
Because more often than not, actually protecting your capital and earning those great returns we all want requires standing completely alone in your views. And I mean completely alone. It means looking at a market where literally everyone is cheering and deciding to walk out the door. Or looking at a market where everyone is screaming in terror and having the guts to walk right in. It's so counterintuitive. So why is this so insanely hard for most people to pull off?
Well, to answer that, we have to look at what we're up against. And that's the deeply alluring trap of the crowd. Going with the crowd offers this incredibly cozy blanket of consensus. It just feels safe, doesn't it? Like, if everyone else is doing it, how could it possibly be wrong? But here's the catch. That cozy blanket is usually marching straight toward a market peak. It's this chaotic, energetic rush to the top where logic completely goes out the window, and it's replaced entirely by the sheer momentum of the herd.
And honestly, the whole financial ecosystem is structurally wired to reward this exact kind of conformity. Think about it. Fund managers face practically zero professional risk when they're wrong, as long as they're wrong alongside everyone else. If the whole market tanks and they tank with it, they just shrug, blame the macroeconomy, and keep their jobs. And financial influencers, they face zero social risk when their advice perfectly matches the consensus. The entire system actively incentivizes professionals to be comfortable rather than correct.
So this sets up a huge, stark contrast between the amateur and the professional. The crowd versus the independent mindset. The crowd is always chasing that cozy blanket we just talked about, but by doing that, they practically guarantee they're paying top dollar for their investments. The independent investor, though, they operate on a totally different wavelength. They are completely willing to endure the serious discomfort of looking foolish right now for the mathematical certainty of winning big later.
And the sheer mathematical logic behind this is just undeniable. To buy what everyone else is buying is to guarantee paying top dollar. I really want you to pause and think about the mechanics here. In any market, price is driven by demand, right? If every single person has already decided that some asset is a sure thing, well, their buying power is already baked into the price. The consensus has already made the asset expensive. So following the herd literally mathematically destroys your potential for outsized returns. The bargain is already gone.
Which brings us to the core paradox of investing. The real investor's mindset is anchored in this very tough reality. To win big later, you absolutely must be willing to look foolish now. When you make the right move, you're almost certainly going to look like an idiot to your friends, your family, the media. You'll feel embarrassed. You'll feel totally out of step. But that feeling of looking foolish in the short term, that's actually not a sign you're wrong. It's a required stepping stone to long-term success.
Let's look at exactly how this plays out in the real world during market extremes. When we're in a market bubble, what's the crowd doing? They're buying into the hype, having the absolute time of their lives. And the independent? They're just sitting quietly, holding cash, looking like they're missing out on the easiest money in the world. But flip that to a market panic. The crowd is selling in pure, unfiltered fear, locking in permanent losses. The independent? They have the raw courage to buy when there's blood in the streets. They act completely inverted to the masses. Now, I know what you might be thinking right now. Okay, but what about the math? What about actually being smart? Well, let's talk about strategy for a second. Strategy is the mastery of valuation formulas. It's analyzing macro trends, reading balance sheets, understanding cash flows. And this is what most people mistakenly believe investing is all about. Just pure, unadulterated intellect. We are constantly sold this idea that the smartest person in the room always wins. But here is the ultimate mythbuster from the material we're looking at today. Intellect is entirely useless without the character to back it up. Strategy is cheap, guys. You can have the highest IQ on the planet. You can build the most complex, bulletproof valuation model ever conceived. But if you panic and sell the moment the market drops 20%, all that intellect is absolutely worthless. Just being smart simply isn't enough to make real wealth. So if intellect isn't the secret weapon, what is? It's character. And in the markets, character isn't just something you're born with. It's something you actively construct. Let's walk through the 3 critical steps to building your psychological arsenal. Step 1, emotional discipline. Step 2, patience. And step 3, conviction. These aren't just motivational buzzwords, okay? These are the actual, practical tools you have to forge if you want to survive the market. Step 1 is emotional discipline. Basically, tuning out the daily noise and hype. Every single day, you are bombarded by financial news, breathless articles, social media feeds telling you the sky is falling or that a new golden age just started. It's a relentless circus designed to make you anxious and force you into trading. Emotional discipline is the foundational ability to turn off the TV, put down your phone, and just completely ignore the noise. Step 2 is patience. And I'm going to actually slow down here for a second, because this is where almost everyone trips up. Patience means deeply accepting that compounding takes years, not quarters, not days, years. We live in a world of instant gratification where we want our portfolio to double by next Thursday. But true wealth creation, it's like watching a tree grow. It is painfully slow. You have to give your investments the runway they need to do the heavy lifting. And finally, step 3, conviction. This is pure grit. Conviction is holding your ground when your portfolio looks wildly out of favor. I mean, it's incredibly easy to be a long-term investor when everything is going up, right? But what happens when your independent choices are losing money for 6 months or 2 years? Do you abandon your strategy and run back to the comfort of the crowd? Conviction is having the absolute steel to trust your own analysis when the entire world is telling you that you're dead wrong.
And that brings us to the core philosophy of our explainer today, which is perfectly summed up in this investing equation. The math of investing, it's actually remarkably simple. Buy assets for less than they are worth, diversify, and hold. But the psychology? The psychology is agonizingly hard, because the real battle is entirely inside your own head. It's fighting your own evolutionary urges to follow the herd, to run from pain, and to constantly chase immediate pleasure.
Because the ultimate truth here is that the market doesn't just test your intellect, it tests your spine. Building a sound strategy is absolutely essential. It's step 1. You need to know the math. But building the character to execute that strategy when everything is on the line, having the character to stand completely alone in the dark, that is where real generational wealth is ultimately made.
So as we wrap up this explainer, I want to leave you with one final, deeply personal question to think about the next time you log into your brokerage account. Forget the spreadsheets and the stock picks for just a minute. Ask yourself, do you truly have the character to stand alone? Thank you so much for joining me today. I really hope this sparks some curiosity about your own investing mindset. Keep learning, always question the consensus, and I'll see you next time.